Welcome to the Wealthwise Show, where financial wisdom meets the road to prosperity. Get ready to embark on a journey to make wise financial decisions and unlock the secrets to building lasting wealth. I'm your host, the Wise Investor, and just as a disclaimer, go get some compliance out the way. This podcast is intended for educational purposes only. It is not intended to be tailored personal advice, because I don't give personal advice on the internet. So keep that in mind as you continue to listen to this podcast. That is for educational purposes only. And if you hear a product, like a service or a company, anything like that, I'm not endorsing them unless they're sponsoring the show. Well, then it's an endorsement. So just keep that in mind as you get into today's episode of the Wealthwise Show. Alrighty, guys. Welcome back to another exciting episode of the Wealthwise Show. It's been great. We're on episode 17, and today's episode, I'm not sure if it's going to be a long one or a short one. It depends on what I think you might know, and I'm going to assume, I'm speaking to someone who doesn't know anything, but that doesn't mean you. So, I want to talk about commissions. So, in the world of finance, in the world of pretty much at all, commissions are a thing. And a lot of times people hear zero commissions on certain brokerages and things like that, and they think, they get to invest for free. Hate to break it to you, that is not 100% correct. You do pay commissions. And I believe in the last two episodes ago, I talked about how, the law of large numbers, how that can really eat, how fees and commissions can really eat into your not only your gains, but if you have losses, eat into your principal. Give me 1 second. Sorry, we're drinking some water. So the thing about commissions that a lot of people don't understand is I don't think they factor that into their investment planning. And don't get me started on trading, because I know for a fact a lot of people who trade, either swing trade, day trade, whatever trade, they don't factor in. A lot of people don't factor in their commissions. So when they get the end of the day statement for their account and they say, "Hey, I thought it made 500, but it's really 390 something," it's because they didn't factor in the commissions. So I want to emphasize the importance of maximizing your profits by minimizing your investment expenses. And this kind of goes hand in hand with episode 15 about fees. I think it was the expense ratios. So like I said, most brokerages are going to have some sort of commissions. You might say, well, such and such broker says commission-free investing. Okay, so how do they get paid? If your money is invested in the stock or the fund, the money goes from your account to your brokerage account, and then that money goes from the brokerage account into that fund, that ETF, or that stock. So how does that brokerage get paid? So that's something I want you guys to do some homework on. I'm not going to spoil that one for you. And you'll be very surprised, if not, maybe not, that they do make money off of that. So, but not everyone offers free commissions. Majority of them do, but not everyone. When it comes to stocks, essentially. But you do have commissions on things like bond purchases. And if you are using a broker dealer, and your broker dealer doesn't offer free commissions, you get commissions on that. And why are you charged commissions? Like, what is the commission for? Who's getting the commissions? So one of the things that I'm actually going to be trying to pursue later this year, before the year is out, is getting my Series 7. So a Series 7 security license allows me to receive payment for selling securities. So when you go to your broker, or you go to your broker dealer, or you go to your money manager and you say, hey, such and such, I would like to purchase such and such at this price on this day. Here's my money. Go do it. Well, that person takes that money and they enter that trade for you. And to get now, a lot of people don't see the behind the scenes when it comes to the actual wire work with trading. When you have one order and then it goes to the market maker and all that stuff. There's a lot of pieces. So even though we're used to instant, like boom, soon as we hit the button, we sold our stock, we bought our stock, but there's a lot of in between there. So there's a bid and ask. So that bid and ask is legit someone asking for that price and someone wanting that price. There you got market makers, you got people on the actual exchange running around on the floor placing orders. Hey, I got an order for 1,000 shares of Apple. I'm looking for someone who has 1,000 shares of Apple that willing to sell it at this price. So there's a lot of inner workings when it comes down to order placement. And that's where your commissions go to people like that who are doing that work on the back end. So you might give me an order and I make out your order ticket. I call up, if I work for a broker dealer, I call up my broker dealer to see if they have some of these shares in stock, because sometimes broker dealer actually house shares. Then I'm like, hey, my customer want this, make sure everything is approved up and up. But if they don't, can you, usually a lot of broker dealers have their market makers on the New York Stock Exchange floor. And hey, can you find me someone with this to fulfill this order? And that's pretty much how it goes when you place an order. And that's where your commissions go, to the people who do those things. And you got management fees, you got brokerage fees. So that commission goes to that person. But what about the broker dealers, assistants? They have offices, rental spaces, the internet that it takes to, because we're not analog no more. So we need high speed internet. And a lot of these companies are using fiber optic cables and all sorts of stuff. All that stuff, costs money. It's a business at the end of the day. So you got your brokerage fees, your commissions, and your management fees. And I think I talked about management fees before, about how me as a fiduciary, if you let me manage your money, so I'm the person who is helping you with your investments, you giving me a certain amount of cash to manage, well, I have a management fee on, it's going to be a certain percentage. But also you got to remember when I talked about the expense ratios, if I invest that money into a ETF, well, that ETF also has a fee. So when someone says zero fees, no fees at all, that's a red flag, first of all. And you should raise up your eyebrow, just one of them, and you say, I think I smell what you're cooking, because it sounds like a scheme. So if anyone says there's no fees, ask questions. This goes back into my first couple of episodes where I was like, ask questions. If people say don't ask me questions and they're telling you to do something with your hard-earned money, don't talk to that person, because clearly they might be a scam. So ask questions. Ask about, like, okay, you say there's no fees, but who get paid? Because you're not doing this for charity. You're not doing this out of the goodness of your heart. So how do you get paid, or how does this fund get paid? And then, you start unraveling their story on how they're going to be charging you hidden fees, or not telling you about certain fees. So there's different types of fees. So you got your investment fees, like I talked about, your expense ratios for ETFs, your commissions, your broker fees, your advisory fees. And these fees are important for businesses who offer investment services, because at the end of the day, it is a business. Do I love my job? Yes. Do I love to help people, especially people who don't understand that they deserve this help because they worked hard? And I live in Florida, so we have a lot of retirees, and I talk to clients all the time who, you know, they got stuck in it in several annuities. Someone sold them 10 annuities because, and they're like 60 some years old and only have $100,000 for the rest of their retirement. And it's all locked up in annuities. Things like that happen all the time. So if I, I got into the business because, I want to help, and I'm going to help, but, it costs money. Like, if I could do everything for free, pro bono, I would. But the softwares that we have, the firms, assistants, programs, vehicle costs for traveling to meet with clients, all that stuff, costs me money. And unfortunately, I got to get paid. Well, not really unfortunate, because I like the getting paid part. But you see where I'm saying that at the end of the day, it is a business. I do it out of the goodness of my heart, but at the end of the day, I do need to get paid. But then you got, so that's going to be your investment fees. Then you got your basic trading expenses. So we talked about commissions and how not every broker dealer is going to charge the same commissions. And that is why it's important to ask questions. So if you are with an independent advisor, and your advisor is not the one doing the trading for you, they have someone, ask them, what is the fees for, what are the commissions for you to do my trades? Because if a client comes in with $10 million and, they're moving stuff over from another advisor to this current advisor, and this new advisor only have certain set portfolios that they put their clients into, well, someone got to make commission on selling all those, $10 million worth of equities, and then get commission on buying $10 million worth of equities. So ask questions like, hey, man, ma'am, what is your trading commissions for, this? Do I get a deal? Are you going to work with me? What's your firm's policy on stuff like that? And then understand that, small trades and big trades, can, be different when it comes down to the commissions. If you're saying, hey, I want 5 shares of P&G. Well, you're making someone do a lot of work for not a lot of movement. And then are a thinly traded company, where the volume's not high, the commissions might be a little bit more. And you come to them and say, hey, I want to buy 5,000 shares of P&G. And keep in mind, guys, I didn't mention this. It was in the intro. I made an intro. Hopefully you guys liked it. But I'm going to say it here. Everything I'm saying, if P&G is a company, Procter & Gamble, I'm not recommending you buy them. This is for educational purposes only, illustrational purposes only on this particular point. Just, stating that, compliance, my compliance guy, I know you're going to hear this. I told them. And so if they did it, it's not me. And so those are some of the things to keep in mind when you are thinking about how much you want to buy. So the rule of thumb is, if you got it, let's say you got, a lump sum of money, then you probably will be able to save on commissions by, buying blocks. They call it a block order. Maybe work with your person, like, hey, I want this. And if you have another client who also want this, put our orders together. And then, because they can do that, they can put your orders together, and then separate the shares, and that should help with commissions and things like that. So talk to basically what I'm also saying. Talk to your people. Don't they're there. You're paying them, so they're there for a reason, and that's to provide a service. So some of the ways you can keep your expenses down. So you can invest with, like I said before, brokerages who offer no commissions. They do make money, but this is about commissions and fees. Just go find out how they make their money. And if you're cool with that, by all means, utilize them. But yes, you can use certain brokerage firms and trading houses that offer, zero commission on stocks. Remember, that's stocks, because bonds you still have to pay a fee for a lot of these brokerage houses or brokerage firms. And I think a lot of the more internet-based brokerage firms don't offer bond trading. But the ones that do, you still got to pay commissions on those. And then verify the fee structure for, like I said, other investment vehicles. But like I said, bonds are typically going to have a fee or a commission. So talk to your broker. Like, even if you have a smaller broker firm, like an internet app brokerage firm, you can pick up the phone and call them. And if you can't get in touch with your broker, reevaluate your relationship with them. Because at the end of the day, you're dealing with your hard-earned money, like I say all the time. So if you call up your bank because someone, scammed your credit card or your debit card and is currently liquidating it, and you try to call your bank and you can't get in touch with your bank, what will happen? You will probably find a new bank. So if you have a brokerage account with a firm and that firm makes it extremely difficult for you to contact them, you should probably look into, a new firm. Simple as that. So talk to your firms. I personally, when I was using E-Trade, like I said, not affiliate, not endorsement, not sponsored. Just one of the brokerages I was using at the time when I was a retail trader. I can call them up at any time, email them. They'll hit me right back almost immediately. If I call them, they'll pick up, and help me out with any problems I have, security, all that stuff. Someone tried to hack into my E-Trade once, with my username and password from a different state. They shut that down real quickly because I logged in earlier that day in Florida, but it was a state, and they tried to log in maybe an hour later on a state across the country. And so they shut that down real quickly, hit me up and say, "Hey, was this you?" Nope. All right, let's put some things in place to make sure that this don't happen, and etc. So their customer service was top notch because that was my hard-earned money at the time. Well, not at the time. It was my hard-earned money. Still is. So you got to talk to your firms. And then, let's see here. I think that's it on the docket. I got a few more bulletin points, but, I'm not going to. Well, I guess I could talk about this a little bit. So there are certain, I don't want to say robo or AI. There's certain, apps, brokerage apps, that allow you to automate your investing, and that is another way you can help. It can be a little more cost effective for smaller investors, is utilizing these apps with automatic investing. And what does that mean when I say automatic investing? So, all right, so there is this one app, and I'm going to say it. I'm not endorsing it. I've used them personally, and I currently use them personally, and they're not sponsors or anything like that, but I do like this app, because it does make it easy for people who are working like 9 to 5, got families, it kind of automates the whole investing process. It's called M1 Finance. Like I said, guys, not an endorsement. I'm not telling you to go get this app. Research it. If you like them, use them. If you don't. It makes no difference to me. I'm not getting paid for this. But I do like M1 Finance for the sole reason of the automatic investing. So I set up a automatic withdrawal from my bank account. I can set a weekly, bi-weekly, monthly, whatever, and that money goes into the brokerage account. And then M1, when that money hits the brokerage accounts, the next trading day, it will automatically buy the shares of the companies that I designated in the beginning when I opened up the account. And they do that by this thing called pie, like a pie chart. So you know how a pie chart is circular and they have little slivers for different things. So you can do that with different ETFs and different companies. So you can basically make your own ETF essentially. And so I like that because they give you the expense ratio. They give you all that information on, the different, you're basically your own personalized ETF, and it's automatic. So I don't have to worry about that. And that helps with saving on commissions too, because I believe M1 they don't do commissions on their shares, and they don't do bonds. So you can easily just get a ETF bond fund if you want to do that. Not saying you should, just giving an example. So yeah, that's one of the things I like. And that's one of the highlights of today's episode. I think we did it. I guess I would talk about, not only low cost ETFs, but maybe look into avoid mutual funds or avoid products with front end fees and 12B-1 fees. And you might say, well, what does that mean? Well, those are usually for mutual funds. So you got A shares, B shares, and C shares. I know I was just about to end this episode twice already, but I think this is an important piece of information to help out. So if you're looking at a mutual fund, you got to figure out, okay, A shares, B shares, C shares. What does that mean? So your A shares are going to be when you purchase the shares, you pay the fee up front. The B shares is, well, you pay the shares on the back end, meaning when you sell. So, if you're trying to if you're going to be in long term, like you're going to be in this, product for a while, you can figure out which are short term, depending on whichever one, which A shares or B shares is good for you. But they also have 12B-1 fees. Basically, like I said, it's a business at the end of the day. Even though it's a mutual fund, they still have expenses. But some of them charge them, some of them don't. And just kind of figure out which ones do. That is why looking at the prospectus of these products is important. Like I said before, the prospectus is essentially just information sheet. So the key takeaways I want you guys to take away to make your use of this information to make wise decisions is understanding that, even though you might have $100 in a brokerage account and the fees are really small right now, but the goal is to eventually get it to where you have a large number in that account. And you have to start understanding, the fee structure of not only your brokerage firm, but your advisory fund or your firm, and then your ETF expenses, your mutual fund expenses, and things like that. Because eventually, let's say you grow from $100 to $100 million, and they're taking out $1 million, over $1 million a year in just fees. That might sound like, oh, I got $100 million, but it starts going to hit your pockets. you're going to start looking like, hey, man, where's all this stuff coming from? So understand, ask questions. If your advisor don't want to answer your questions, it's a little fishy. If your brokerage account or your broker don't want to answer your questions, that's a little fishy. If the person you're getting advice from on YouTube don't want to answer your questions, that's a little fishy. So, stay wise, guys. It's a cruel world out there, and everyone's trying to separate you from your dollars. So that's going to be it for this episode. I greatly appreciate you guys listening. Thank you for allowing me to impart this wisdom. 17 episodes, that's 17 weeks of me hearing my voice. Wow. So I appreciate it, guys. Thank you again. I look forward to another great episode for you that I will be preparing. So until next time, guys, stay Wealthwise. Investment advisory and financial planning services offered through Simplicity Wealth and SEC Registered Investment Advisor. Sub-advisory services are provided by Simplicity Solutions, LLC, a registered investment advisor. Any insurance, consulting, and education services offered through the Wealthwise Show. The Wealthwise Show is not affiliated with Simplicity Wealth and Simplicity Solutions.